It is, and this is not what I'm saying. This is what Michael Burry is saying, and he didn't make the worst calls. He said it's the greatest speculative bubble of all time in all things by 2 orders of magnitude, and I think that's basically says it all.
Welcome back to Wall Street Silver. We have a special guest with us today, Ron Stöferle, managing partner of Incrementum. Thank you for joining us, sir.
Hi, Jim. Good to see you. Thanks for the invitation.
Hey, let's get right into it. You've done some great videos recently with Mike Maloney, so I'm sure a lot of our audience is already familiar with your videos because a lot of them watch Mike Maloney's show also. And what's your view right now? Let's dig right into the inflation because that's the topic everyone's talking about. Where do you come out? Where do you come down? Transitory, or are we dealing with a much bigger problem long term?
Well, I think it's no big surprise that I'm not in the transitory camp, and I think from my point of view, I'm not only from Austria, but also a keen follower of the Austrian School of Economics. And I wrote together with 2 friends a book called Austrian School for Investors, Investing Between Inflation and Deflation. And from my point of view, now for the very first time in ages, basically, you remember the term the Great Moderation that basically started in the 1980s. So I think for the very first time since then, the inflationary forces are stronger than the deflationary forces. I think that COVID was really the tipping point, and I'm preparing a big keynote presentation about tipping points. And I think it is crucial to understand that we are moving from this monetary dominance to fiscal dominance. I think we're all focusing on what the Federal Reserve does because everybody was following every step and every word from the Federal Reserve after the great financial crisis. But I think now it's really the time of fiscal policy. So we should focus much more on fiscal policy, and therefore I think the script of the is pretty easy. Everybody is telling us now, that's Act 1, inflation is transitory. Then we are questioning how inflation is actually measured, and we say, well, let's do some average inflation targeting. So basically, as inflation numbers were too low in the past, we now have some inflation budget basically for the future, so we can allow higher inflation rates. So the Federal Reserve introduced that last summer, and now the ECB is following its path. Then now we're in Act 3. Basically, everybody's saying it's only transitory. It's about this supply squeeze. It's about logistics and so on. Then I think the next stage will be, well, okay, it is transitory, but we should talk about really long-term averages, because so far nobody really said what time frame they are using for this average inflation targeting. Is it months? Is it quarters? Is it years? So I think going forward we will see, well, we're taking a very, very long-term approach, and as for the last couple of years inflation was too low, we can allow it to overshoot over the next couple of years.
Well, when do you think asset prices start to deflate? The market, real estate.
Well, that's of course the big question. I mean, we know that if I make the comparison to a party, we know that this is already the stage of the party where everything is going crazy. So on the other hand, those kind of crazy parties can last much longer than we would all think, because of illegal substances and whatever. So it can take much longer than expected, and as long as the most important price in markets is so heavily distorted, being interest rates, it still can continue, although obviously I think one of the main things that one has to say is um, that now we really see this retail participation. And this is something that we haven't seen in equity markets over the last couple of years. Now it's really those retail investors, and I don't want to judge that. I think it's good that young people start investing in equities because yeah, there's not too many alternatives at the moment, especially on the bond market, and they simply cannot afford any real estate. And for them, sadly enough, precious metals are just too boring. And I think this is also something for the industry to make gold and silver more appealing to a younger crowd. And this is something that we really try to do with our publications. So long story short, how long can this bubble continue? Uh, I think it can take longer than we all think, but it is obvious the longer it takes, the worse the result and the hangover will be after this big party.
So why don't you tell us what your price targets are on gold and silver in the near term, in the intermediate term, and the longer term?
Well, I think for this year, for gold, I can definitely still see new all-time highs. I think that's definitely possible. But for I say for the medium term, I would say $2,300, which is the inflation adjusted all-time high. That should be the next bigger target. And then last year in our in Gold We Trust report, we presented our long-term price model, which is based on M2 growth as well as trust in the monetary system. So we explained the whole model in 2020 report, and we arrive at a conservative price target for the end of this decade at $4,800, which sounds like quite a lot to many people, but it's a compound annual growth rate of roughly 10% per year. So it's not that dramatic. I think that's definitely realistic. On the other hand, we also had another great interview with Fofoa. I don't know if you're familiar with him, friend of a friend of another. That's some sort of a mysterious blogger who refers to central bank insider, and it's really fascinating if you once you go into this rabbit hole. And I think he rightly says that gold is really, it works best in transition times. So don't focus too much about daily movements. Just try to get the big picture.
Well, let me ask you this. The big discussion right now in the United States economic circles is, will they taper or will they not taper? And a lot of us believe it's just not possible. Everything is so leveraged and floating just on a sea of money that if they actually did taper, or actually even after the taper, if they actually raised rates, everything would just pop. The everything bubble's gone. Do you think they can actually taper? Because they're not even having that discussion in Europe, right? The ECB, they're not even talking about it. They're still just, hey, all guns ahead, right?
Yeah. Well, yeah. Taper is not something that we're discussing over here, but for some reason the ECB seems to have the mandate, or Mrs. Lagarde thinks that she has the mandate to save the climate now and to fight climate change. I didn't see any real change in the mandate of the ECB, but this is happening. But I'm a keen runner, and I did some marathons, and the word tapering, it comes from sports actually, because before a big event you start tapering your practice. And so before a big marathon you run less and less and less to
let your body recover.
Exactly. And then you've got the big event where you've got full energy. So I always say, well, perhaps the purpose of the whole tapering is just to show, well, if hits the fan, then we really go full
Yeah.
steam. But I think it's the whole discussion is already quite telling, because that sounds like an alcoholic telling you, well, I will start drinking not one bottle of scotch. I will constantly decrease it on a monthly basis, and I will start doing that in a couple of months. But it depends on my mood and how everything is going. So I think the fact that we discuss this thing, and there seems to be nothing else in financial markets nowadays, that's already quite telling.
Yeah.
If you want to follow the whole tapering discussion, I think that Jay Powell, but that's just my view, he wants to start tapering after he is reappointed. I think, as I've said before, the whole Delta variant is providing political cover to further delay the tapering and to increase fiscal stimulus. And I think that the whole tapering stuff basically is already priced in, and we're currently crunching the numbers, and I think that for gold, actually, once we get this go that tapering starts, I think we could see some sort of a sigh of relief, and the market can move on from this stupid topic then. But if you read what's coming out from the Federal Reserve, I think they're very concerned about the downside risks. They are very concerned about disinflation. Nobody's really scared of inflation at the moment, so they will continue. And yeah.
Well, the interesting thing is, in the United States, I don't know how they stop buying bonds from the standpoint of, we have a $3 trillion deficit right now, the budget deficit for the government. So they've got to find buyers for 3 trillion. I don't know if you follow Tavi Costa also on Twitter, but he had some charts that it's 7 trillion in debt is maturing this year that has to roll over. Foreigners are buying less and less. I mean, Japan just pulled out of a lot of treasury bonds and invested in European zone bonds, sovereign debt instead. China's not buying the US debt that they used to. So if all the big foreign buyers aren't willing to buy our debt anymore, I don't know how the Fed stops tapering, how the Fed tapers. There's got to be someone to buy the debt, and there's 3 trillion in new debt coming. So I think it's a big bluff. And I think they might actually have to accelerate their buying. That's not priced in, is it?
No, I think at some point. So this is basically the next step, or the next page on in the playbook, is probably a yield curve control. And I always said, once we go to 2% for the 10 years, I think that some sort of a implicit or explicit yield curve control will be introduced. And I'm pretty certain that at some point the Federal Reserve will also start buying equities. I think this is something that we're already seeing.
If they haven't already, right?
Yeah, the Japanification of
yes.
Yeah.
I'm really curious about this. The Fed is pretty much pedal to the metal and have been for a while. What happens when we do have a black swan event? Like a long-term capital management blowing up, or something along those lines.
Yeah.
What do they do?
Yeah. What do they do? They've already thrown everything in the kitchen sink at this thing. I mean, at some point, when they come to the table with $5 trillion and it does nothing, I mean, they're done. They push on the string, and then nothing happens, right? I mean,
and what does the world look like at that point?
Well, I think
we go down rabbit holes here, Ronald. Okay.
Yes. As I've said before, I think if you want to make the analogy to the great financial crisis, I think we can say that they are prepared to avoid another big financial crisis, another big credit crunch, because they've the tanks of the firefighters or whatever, they're completely full. So they're kind of prepared for for a black swan coming from the financial system. But I think, that's the nature of black swans, that you cannot anticipate them and forecast them. Who would have really expected a big pandemic to happen? So we've got no clue what the next black swan will be. I think it won't be a pandemic. It won't come from the financial from the banking system. I don't know what it's gonna be. Perhaps it's a military thing. What's going in Afghanistan at the moment. That's pretty frightening. We're seeing lots of developments that actually scare me quite a lot, and they show how divided populations, not only in Europe and the US, basically all over the world are. You're either very right wing or very communist, socialist, whatever. But there's nothing in common anymore between those two camps. Yeah, and this is something that, if you have a look at the protests, for example, at the moment in France, also in Italy, that's really scary stuff that's happening. So I think we can be rest assured that they will fight the next black swan with enormous amounts of liquidity. I briefly talked about this standing repo facility. So there won't be any dollar funding pressure. So many people think that there will be a huge surge in the dollar in the next crisis. Well, if you have a look at the COVID crisis, dollar went stronger, but then it was a pretty short rebound. So from my point of view, we are in a structural dollar bear market. That doesn't necessarily mean that I'm too bullish on the euro versus the US dollar. There are some currencies that are, how do you say, the less dirty shirt, or that perhaps win this ugliness contest. But I think, if you compare it to fiat currencies, I just want to own gold. So it is, and this is not what I'm saying. This is what Michael Burry is saying, and he didn't make the worst calls. He said it's the greatest speculative bubble of all time in all things by 2 orders of magnitude, and I think that's basically says it all.
But in some of these inflation bubbles, inflationary bubbles, you've seen the stock markets and the housing markets of Zimbabwe or Venezuela, or they just keep going way beyond. I mean, pricing power is totally blown away at the same time, so it doesn't really matter. But these things can just go. But let's change the subject. Back in the 1970s, they were able to stop inflation in the United States by Paul Volcker raising rates to 20%. And in this current scenario, I don't really know how they stop inflation. It's not really feasible, because of this everything bubble you just referenced. It doesn't seem like our economy could even handle 3% rates, much less 20% rates. How do you stop inflation in a scenario like this without being able to raise rates?
Yeah, well, that's basically the big question, and I think it's really all about real rates. Perhaps nominal interest rates can go a bit higher, but I'm really convinced that real rates will continue to be negative for the next couple of years at least. So that's basically my main case, and as I've said before, that should be a pretty good environment for the price of gold. If we should really see, I don't think that we're on a path to hyperinflation. Actually, what I really see is much more financial repression. So capital will be directed into areas where it wouldn't normally go to, primarily government bonds. I think that many asset classes will they will make it harder to invest in them. For example, in Germany, you can now buy physical gold only, I think, for up to 2,000 euros. It used to be 10,000. So
Wow.
so those are all small things how to,
Is there a
direct.
is there a time limit on that? Like per year, per month, per day, or per transaction? They've
It's
really
per
stuck.
it's basically per transaction, but you can't go there like 10 minutes after with a trench coat and sunglasses and say I would buy an ounce again. So
Wow,
that
they've really stopped people from buying more than an ounce or so at a time of gold.
Yeah. Over here, it's in Austria, for example, it's 10,000 euros. But I think those are all small measures to really of this financial repression. And of course, we all know that the the most important economists, or I don't know, think tanks, whatever, they want to abolish cash. Um, Not because it's for illegal activities, but if you've got only digital money, it's much easier to implement negative rates. And then also, I mean, this is something that's definitely quite scary. You can say, well, Jim, you haven't spent enough in the last month. You have to spend more, otherwise we will, take 5% every month from your account. So you will be. It's the fine tuning of monetary and also fiscal policy can be easily achieved with digital currency. So I see these central bank digital currencies as a very frightening thing going forward. But to answer your question, uh, perhaps nominal rates can rise um, to a very small degree, but real rates will stay negative for the next years to come. I just don't
Yeah.
see any way out. It
Uh,
just doesn't add up.
So
I'm
they're just gonna.
completely fascinated that they're limiting gold purchases. I mean, that's throughout the whole EU,
No, that was in Germany,
which
and
is
it's
from
only
Germany.
it's not eliminated, but you could buy it without how do you say, any legitimation. So you basically went there with your cash euros and bought some gold coins, and now the limit for such transactions is 2,000. And
How
So
did they justify that?
you go with your wife and you go with your 3 kids, and each of you buy 1 ounce, and so for each.
yeah,
So there's ways
that's why
around
I've
that,
got so
right?
many kids. Yeah.
But how and why did they justify that?
Yeah, this is the
Well,
first I've heard. This is
it's
the first I've heard of that.
of course it's because of illegal activities and money laundering and
That's what they say.
terrorism and whatever.
There's more money laundering in euros and dollars than there is in gold. I
Yeah,
mean,
no doubt about that. I mean, this is obviously a form of manipulation of the market.
yeah, that's crazy. Are there any limits on silver purchases along the same lines, or is it only gold that was targeted? Is this a recent thing?
Honestly, I don't know if it's on silver as well. I didn't follow that, but there's a VAT on silver, which is 19%.
Yeah, that's crazy.
Wow.
Which doesn't make it more attractive. But I have to look that up. That's a great question, honestly.
I just recently bought I have a 1 ounce Austrian Philharmonic coin. I just bought about a month ago. Just I bought one from the USA, Canada, the Britannia, and Austria. So I got 4 ounces of gold now.
But it's a beautiful coin, isn't it?
It is a gorgeous coin.
Yeah. Yeah.
If anyone wants to do a gold coin, that's one that they should definitely just buy one, just so at least you have it.
All of what you're saying now, just it reminds me of the classic argument how, like, when there's centralized control, they just have to control more and more and more until the point where we get just complete authoritarianism. I mean, it's like classic Austrian school of thought, isn't it?
Yeah. Well, Ronald, thank you very much for giving us some of your time today. We really appreciate it. This has been fascinating. And we'd love to touch base with you again in 2 or 3 months as the year develops and see how things have changed and get your opinion again.
Absolutely. It would be a pleasure. Thank you very much, gentlemen.